Hello and welcome to Building Tomorrow's Insurer. Today we are diving into maybe one of the biggest shifts that's happening across financial services, and that is very much the move from standalone products to kind of embedded financial ecosystems. And I know we're thinking about that a lot here at Canopy, and I know the man joining us today is very much the front and center of that, and that's Michael. He's the founder and creator of Thriday, which is a platform that's built very much to simplify banking, accounting, and tax for small businesses. And there's the journey I've watched, Mike, and the journey's been on for the last few years, and it's been awesome to watch from the outside, and very much how you've been, I guess, front and center of trying to change the financial workflow of a small business and taking lending, payments, insurance, all of those kind of different parts of the stack and how you can bring those kind of all together. And so Michael, look, thanks so much for joining me today. I really appreciate your time. I know I'm sure you've got lots on, so I appreciate you carving out a few minutes for me.
No, thanks for having me, Nigel, and looking forward to talking about fintech and everything that's been happening. Lots going on at the moment.
Sure is. And like let's kick right up, like just get straight into it. You've obviously built and scaled Thriday to with this focus of simplifying kind of admin for small businesses, really, like predominantly. And obviously you've done it on your own, and now very much you've after the Tyro acquisition, you're doing that within the Tyro kind of ecosystem. And so to frame the conversation, when you think about the real problem you're trying to solve for small businesses when it comes to financial products, like what is that core problem that you've been, I guess, bashing down the door on over the last few years?
Yeah, so the interesting thing here is it's actually changed a lot, because when we entered this particular vertical of wanting to tackle financial admin, and the original thesis was around the administrative burden that businesses have to do all the different jobs around, paying staff, paying suppliers, tracking their income and expenses, cash flow, ultimately leading into lodging BAS or taxes. Okay, so there was a lot of different things that a business has to do to be compliant. And the main thing that we thought we were solving in the beginning was time and cost. So we actually thought of ourselves as a productivity tool. So how do we take all these things that a business needs to do, make them really simple and cut the time? So everything was like a time angle. Interestingly, as we evolved and we spoke to more and more customers and we invested more time, especially from a go-to-market marketing perspective, we actually realized that what we were solving was stress. So whilst these challenges of time and money exist in banking, accounting, and tax, ultimately what it manifests for the business is that that business owner is stressed. They're worried that they're not on top of paying their bills. They're worried that they're behind on their taxes and that they're going to have someone knocking at their door at some stage. So that little shift actually became very much how we branded and positioned the product in market. But yeah, that shift wasn't like something I expected at the start, but ultimately, yeah, where we ended up.
It's so interesting, isn't it? Because you like convenience is the thing that I suppose it jumps to everybody's mind when you think about these ecosystems, convenience being the primary driver here. But maybe what you're saying there is actually it's it's almost risk protection on the downside, which is to say, I know I'm not getting to everything, and so I want something that I can, like I suppose, rely on and take some of the risk away from me. That I'm not getting to the things that will, I guess, kind of send me to zero and maybe go bust.
Yeah, exactly. And I think if I think about other sort of similar products that have become, very successful, like you look at, say, Uber, a lot of people would immediately say, well, Uber is a tool that allows me to get from A to B really efficiently. I don't have to worry about hailing a cab. That was really difficult in the past, not very time efficient, all of those things. But ultimately, actually, when I think about it, it's reducing the travel stress. So I know with Uber that I can get a car quickly. if I couldn't, I probably wouldn't. Uber wouldn't have been successful. Like if I have to wait 15 minutes every time, that's not a great experience, and it's probably increasing my stress. And then the second thing is like if I know that it's not going to get me from A to B efficiently, then that's also not a great outcome. And I think that trip thing's a really good analogy because ultimately people will pick and choose how their mode of transport is. And in a similar vein with Thriday, the mode of transport for us was, well, we're not just quick and efficient and more cost effective than the traditional setup, where a traditional business today will have an accountant, a bookkeeper, and a software like Xero or MyOb. We amalgamate that into one, and we largely automate it. But the outcome of it is like I'm on top of my money. I know exactly what my financial position is. I know exactly what tax is due, and when it needs to be lodged, I can use this single piece of software to do it. So I feel on top of my money. I feel on top of my business, and I essentially feel good. And that's where we ended up. And a lot of our customers, if you read our reviews, it's that stress reduction that's actually become the main thing that they are paying for when they sign up for our platform.
Love that. And maybe there's a bunch of startup founders that listen to this pod, and obviously you've been through a bunch of the business. I thought something that was really interesting early in your journey was picking a fight with the big guys, and that's sometimes having an enemy is part of the story. Can you maybe touch on that as much as you can of like strategically why you did that, and then kind of was it kind of net positive for you in terms of picking a fight with the accountants and with Xero and MYOB?
It probably reflects a little bit of my personality.
Yeah.
I didn't. I've always had a little bit of a chip on my shoulder. I didn't go to like the best school, or I didn't get, in my mind, I didn't get given a lot of things growing up. Like I had to go and earn them. And I think in that sense, it's sort of when I'm running a business or even in work, I'm constantly looking at sort of motivations and, what I want to do. And I did feel that, and it's funny because whilst completely respect the likes of these big organizations like Xero and MIB for what they've built, what they've done, both sort of relatively homegrown. I know New Zealand, Xero's from New Zealand, but really great companies that have done great. But equally, when I look at them now, I think that they're almost the antithesis of what they started, where they were the innovator, they were the disruptor, they were creating great, compelling propositions. And now they're almost at the other spectrum where it's very rare that you see them innovating. A lot of the moves that you see that they're doing are sort of protecting what they have. They're not making things easier. It's all about revenue. So, it's a very easy thing for me to look at and go, that's irritating, right? And I think these big companies should continue to serve their customers and continue to do a great job to solve problems that they're having, but they're not. And they're not because they're focused on revenue, unit economics, their own pay and whatever they're trying to achieve, or share price moves. So I think very logically, like for me personally, when we built the business, it was actually a big motivation to try to take on those companies. That was number one. But then to your point, we did try to use that in a fun way, I would say, to sort of build our brand and build awareness of our platform. We don't have a lot of money. We didn't have a lot of money to do marketing, obviously to the scale of those companies. So we had to get creative. And yes, we would use, social media posts, especially on LinkedIn where we had a healthy audience, to sort of, take digs at those companies when they did something. And, it wasn't too hard because we would see Xero were doing price increases almost, every 6 months with no new features. We would see, for example, Maya talking a big game, but ultimately when you look at the actual product and their reviews, they're terrible. So there were little things, yeah, we would take pot shots on, and that would drive that sort of fun brand piece, and it also tied into our sort of overarching strategy, which was we always very much had a community of business owners using our platform. So a lot of them loved the fact that we were sort of taking on the big guys, so to speak, and we leveraged that to build up a good presence in the market with a relatively small budget.
Yeah, totally. And like talking a little bit more about Thriday and the strategy here, and that is, it was this kind of platform ecosystem has been spoken about, I reckon, for over a decade. But it seems that there's been some like meaningful change in the last 12 to 18 months. And so can you touch on that around what you think has actually changed in the last 12 to 18 months when we think about kind of maybe platform monetization, the actual solving of embedding products, and maybe the last piece of that being customer expectations being actually solved for?
Yeah. So the little bit of history about Thriday is the actual concept or idea for the proposition, which for the audience is bringing together banking, accounting, and tax into one platform versus today where you know have your banking relationship with a CBA or NAB, then you're pulling data into your software, into your accounting software like a Xero or MYOB, and then you're using another third party, typically an accountant or bookkeeper, to lodge your taxes. There's a lot of separation silos there, a lot of sort of data getting lost in between, no real time, very expensive because you're integrating humans and software into one thing. So we wanted to tackle that and build this entire platform. Now, the actual idea for that came to me many years ago. I used to actually head up mobile banking at a couple of major banks, and I could see how businesses were interacting with their money and struggling with this very problem. And at that time, I couldn't see how you could bring something to market without it taking many, many years and billions of dollars. So banking, until maybe 7, 8 years ago, to issue sort of banking products, you needed to be a bank. It just wasn't a way around it. Um, and now that sounds funny because there are so many fintechs offering sort of card issuing. There's banking as a service solutions. You can partner with banks. There's a whole sort of ecosystem just for banking that makes that infinitely easier than it was 10 years ago. To the extent it wasn't possible, and in my mind, it wasn't worth pursuing this idea because you just wouldn't be able to execute it. The second part of it is accounting and tax. Again, you couldn't integrate into the ATO, say, more than 10 years ago. So the ability to sort of streamline tax lodgement, you would have to build some sort of custom solution. Very expensive, very difficult to test, very difficult to scale. And then finally, you touched on, we did integrate other parts of services. So we did things like insurance. We did things like, making sure it was easy for people to be able to get information from Thriday into another financial services provider through open banking if they wanted to, get a loan and things like that. So those embedded solutions just became there became a plethora of, I guess, of them, and that made it really easy for us to pick and choose best-in-class solutions that ultimately we managed and orchestrated all of that. The front end was our experience. The integration was us. But underneath, if you dug down 2 or 3 layers, yes, we were working with a bank, we were working with an insurance provider, we were working with the ATO to sort of create this seamless experience for customers. So this embedded thing, it's not just embedding. In our case, we were not just embedding third parties into our platform, but ultimately we were being embedded, I guess, through open banking into other solutions where perhaps a lender was using data from our software to make a credit decision, to give money to one of our customers. So it's really interesting where you're sort of servicing on one side and a recipient on the other.
And do you think that and obviously now you extended that further with Tyro, and so do you think there's a shift within the customers' expectations of this of single platforms to perform more services in, like, especially specifically in the financial services sector, than like having individual platforms you go to? Like, do you think there's a customer expectation shift here around what they're wanting? Like, have you seen that?
Yeah, I think it's customer, absolutely, and the reason for that is that I guess what we've seen as well is that the solutions offered by embedded partners either meets or exceeds what that customer could receive going to a niche or standalone solution, if that makes sense. So in the past, if I wanted to get the best insurance product or I wanted to get the best accounting software or the best banking service, I needed to pick a specific uh, player in that market. But uh, Thriday, if you look at our feature set for banking, um, a lot of it was commodity services. So a lot of what a CBA or NAB would offer, we could offer through a banking as a service partner. We're not a bank, we don't have a license, but we could actually launch sort of 90% of what those organizations offer, and probably close to 100% of what our specific audience needs from a banking provider, even though we weren't a bank, just by partnering with a banking as a service solution. Similarly on the others. So I think it's a bit of both. I think there's absolute customer expectation, and it's easier and better if you're just using one system of record and all your data's in one place. It's easy for it. It's real time. You can visualize it. You can see it all there. But I think the second thing that's really happened is the embedded solutions have gotten to the point where they match or exceed what's available from another solution. So it's not as if a Thriday customer is getting a degraded banking experience or they're getting a degraded insurance experience. They're actually getting what they would get elsewhere. So I think that combinations of things has resulted in this sort of groundswell of people looking and expecting that a platform can provide, a holistic set of features, even if it's not core to that particular business.
Yeah, interesting. Because it seems like if we play that through, which is actually there's now customer demand. There's some of the core infrastructure pieces which enable that to happen, which is you've now got the banking as a service and insurance as a service. These different types of stack that now allow you to have that single platform that sits on top that provides multiple services to a customer. And I'm interested in. It's always easy to go with talk about that, but I'm interested in you walk the walk in terms of going from this theoretical magical platform that everyone talks about to actual practice of delivering it. And I'm sure that's not easy, and there's a lot of challenges in doing that. And I'm sure insurers that listen to this and startups that listen to this all think, yeah, Mark, that's great. It all sounds awesome, but my experience has been very hard. And so maybe you can kind of take us in under the hood a little bit, as much as you can, which is to say, how do you do that? How do you go from theory to practice? How do you go, this is something magical I want to do. We've got the services that are there, but actually now kind of going, okay, how do I day 1 to day 10, today 300, today 700, go, actually, I'm going to build a platform here. Maybe you can kind of talk me through some different elements of how you actually went about building that platform of a multiple of embedded services.
Yes, yeah. And I can be very granular here and hopefully try to give a sort of visual layer to it so people can picture it in their heads. But
Mm.
at a very beginning, I'm a product person by trade. So I was fortunate to be involved in some large re-architecture projects in banking where we essentially moved from having these sort of monolithic platforms
Mhm.
to and very much front end, back end combined into splitting that out, moving to APIs, moving to specific data lakes and sort of how you architect these things. So the first thing we actually did, to be specific with Thriday, is once we understood the customer problem and the sort of series of jobs to be done. And this is literally, you document these things. So you list out the problems and you list out the solutions and you list out the jobs to be done. We then created a product, I call it a product capability matrix, which is essentially starting with the big rocks. So banking, accounting, and tax. So you can picture these as headings. You break down within those particular areas, what are the specific capabilities that you need. We need an ability to authenticate a customer. We need an ability to allow them to open an account, to manage the account, make a payment. That's banking, right? Then you go into accounting. We need an ability to authenticate the business, validate that, they have an ABN. And then when you go through that and you list them out, let's say you end up with, 20 capabilities within each group. You then look at, well, how are we going to deliver that functionality. And you look at then build, buy, partner. Now, for some of those, obviously, we go, well, we need to partner, we need to build, and some of them we need to buy. And you have that sort of mapped out. I think the key thing, though, is from an architecture perspective, especially with the product lens, is you need to be the system of record, and you need to be, I guess, the master of that data. So to give you an example, when a customer signs up for Thriday, we collect all that data, we verify them, and then we use that information. And if the customer wants to update it, so they want to change their phone number, their address, anything like that, we're the source of truth. The reason this is important is because then it allows you to feed information that's accurate and up to date with any potential partners, and it reduces downstream impact. So to give you another example, let's say I was embedding an insurance product. At that point in time, my assumption is I need to provide name, business, address, all of that information to my embedded insurance partner. If I'm not the source of that data, if that data is not up to date with me, then it's going to create downstream impacts for that customer. And the insurance provider is either going to get stale data, or the customer needs to manually edit it rather than creating that more seamless, friction-free experience where it's up to date. We already know who they are. We know everything about them. And all we're doing is, I guess, executing the actual purchase of the insurance, as an example. So I think that product architecture is really important. And we really fought tooth and nail for that, because in some instances, some of our partners wanted to be the system of record for some of these things. And we said, no, we need to own that. And that actually facilitated a lot of easy integrations for us, because we always had up-to-date data, and it reduced the need for a customer to populate anything. The other bit with that up-to-date data is it does create some really nice user experiences where perhaps you already know enough about that business that your embedded partner can automatically provide an offer. So again, using insurance as an example, you might know their turnover, you might know whatever they need. So the actual insurance partner can actually provide an offer rather than asking the customer to fill out a bunch of forms. So a lot of the experiences we created were not only compliant and had all the right data, but it was actually quite a slick experience, and things that today typically aren't achieved. A customer has to go off platform, they have to actually fill in information, all of those things that reduce your conversion rate. So all of our integrations were on platform, API based, and we were either pre-filling or sort of passing that data in the background so that the user didn't have to do much.
Yeah, totally. And when you think about financial services, it's generally kind of pretty high trust environment in which a brand recognition seems to have quite a lot of the sway. And that's something that I know that when folks are thinking about building ecosystems, is something they sweat on a little bit, which is, how do we present to a customer? Is it Thriday plus brand? Is it Thriday powered by brand? Is it Thriday hands off to brand? Like, how did you think about that decision-making process when you were building these partnerships with other service providers that you want to integrate into the platform?
Yeah, some of it related to absolutely the brand. So if they're a well-known brand, absolutely you'd probably want to leverage that and have it front and center in the experience. The other component is around operations and customer support. So if that particular integration does require some sort of support, or the support is going to be handled by that other brand, makes a lot of sense to make sure that's surfaced during the flow or the application flow, so that if support is required, the customer doesn't get some random, contact from another third party they've never heard of and wonder what the hell's going on. So I think that's another layer for looking at it. Sometimes a partner has, and this is factored into your, I guess, procurement process, but sometimes an embedded partner has specific requirements about how they're branded from their perspective. So you do need to consider that. I think, yeah, they were sort of the three lens we typically look at. Will leveraging the brand of that partner actually enhance or create more confidence for the end user? Does this particular product or service require or will have customer support by that particular third party, and therefore we don't want it to be a surprise to this customer? And then thirdly, yeah, there perhaps could be either a preference from that partner or some sort of legal requirement to disclose the
Okay.
brand
Yeah,
in the flow. Yeah.
makes sense. And the last piece on this, uh, and we don't have to go into specifics here. This is more just like mental models of how you thought about it, which is commercial structure. And so whenever obviously you're working with a platform partner, it is so important for everyone to win. Because unless everybody's winning and you're all aligned in terms of interests, I think often partnerships don't work. And so can you kind of talk to me a little bit about how you thought around that just commercial reality, which is the viability of these partnership style models around like cap sharing and revenue splits and making sure like retention's like aligned. How did you go through that mental and strategic thinking around, okay, we're taking a partnership approach to bring multiple services. It has to work for all partners commercially, and therefore we need to kind of put these commercial structures in place to make it work.
Yeah, so with that, it was a case of, and it is very difficult. It's very difficult to estimate what the adoption rate's going to be, what the conversion rate's going to be with a particular revenue generating embedded partnership. Some of our embedded partnerships were costs for us. We were offering a service that can be a little bit easier, but yeah, on the revenue side, it's a challenge. And I think some of the things we were able to do is we did have, and I'll come to your question in a second, but we did utilize things like wait lists, um, or surveys. So in product, in situ, we had little things there to prompt people to give us feedback about whether they wanted that product, or if we had that product, do they want to join the wait list? That helped us facilitate, I guess, slightly more accurate forecasting of potential adoption. Often, I think it's around my general approach with procurement or partnering is transparency, and I do genuinely. I don't want to win. I want us both to win genuinely. Like, I know some people, I can see when I'm negotiating with them, they want to win, and I hate that, and I don't really want to work with them, but I genuinely want us both to win. So, and where the transparency then comes in is I want to be transparent to them about what I expect from an adoption take-up perspective so that they know, like, I don't want them to expect they're going to make millions of dollars out of this thing if it's going to end up being $100,000 a year. That's number one. Likewise, I expect transparency back to me about, well, this is what we make. This is how we split it. This is how we think about it. This is why we think, we can give you this cut of whatever that is. And, typically when you're implementing a revenue generating product, you're obviously usually getting a percentage of, whatever the partner is getting. So I want to understand how that works on their side. And I think final element is the cost to build or implement. Now, obviously, that has reduced significantly over time because of embedded and APIs. So often now it's less about the effort, because for a fast moving fintech, it's usually a few sprints of work. It's not months and months of work. To integrate or embed something. So yeah, you're typically more focused on that revenue side and making sure both parties go in eyes wide open as to what they're going to get at the back end of it.
Yeah, it makes sense. And then when you're thinking about purely decision making, which is you've determined when you are deciding on a partner, you've had this kind of, you put together these kind of revenue model metrics, etc. Is there anything that always had to be true across like tech compliance, customer experience, commercial terms for a partnership to work? I.e., how you have a tick chart of these things need to be true for this partnership to be viable. Did you kind of think about that around any kind of must-haves for you for a partnership to even get off the ground?
I'd say that really good question, and it's probably not the most eloquent answer, but for me, it was actually, are they hungry for this?
Interesting.
And
Yeah.
you can work with big partners and you're a very small fish in a big pond and you're not going to get the support. And if you need something, they're not gonna take the extra time to make it work or whatever. And you can easily see as well, if it doesn't quite hit the mark when it goes live, that they're going to lose interest. And versus the hungry partner, they're going to be there with you, tweaking things, trying to improve the results, tracking performance, trying to get that uplift that often when you launch a new product, you're not going to get that immediate, like hit the ground running. So I always actually looked for that hunger, and I did prefer working with partners that, you knew that it was material to them. Now, a lot of people look at that and go, that's risky. There's the alternative, but I'd much rather take a hungry partner than someone who's not really going to get anything out of it, in terms of the grand scheme of their business. But
Yeah.
yeah, that's assuming obviously that they have ticked the boxes, right? So we had certain policies around data, how they stored it. We were ISO compliant, so we had to make sure our partners were. But assuming they ticked those sort of, boxes, we just wanted a hungry partner that we knew really wanted to make this a success.
And taking that one step further, and maybe don't have to name any names specifically here, but was there had there maybe you can give some kind of context around it? Was there ever a product integration that strategically looked great, but then operationally just didn't kind of get there? And maybe what broke first when you were thinking about that, like when it panned out?
100%. We had a particular partner that, on paper to investors, etc., was a really strategic and exciting opportunity, but I would say really lacked that hunger piece. And it's a difficult dilemma. What do you do as a founder? Do you hope you can change that? You sort of know going into it that they're not super hungry to make it a success, but you think, well, if you can, it could be massive for the business. And I think, it's interesting. I'd often chat to my co-founder at the time, and some of the early warning signs for us was the amount of time they would spend negotiating on dollars and cents. And, you're talking about opportunities that could make millions for both businesses. And you could just see that, I guess perhaps either culturally or how they operated, we would say, well, we wish they invested as much time in trying to make the integration go smoothly, or once it was live, wish they invested as much time in making it grow, right, in terms of how they put resources and support around it. And I often see sometimes as well, and I mentioned earlier that, when people start negotiating really hard where they want to win, that's a really bad sign for me, right? Because I think, well, when this thing goes live, are you really going to battle for us? And I think a lot of them, they worry about winning the battle rather than the war. So and I've seen this in other organizations too, where the particular partner is so trying to win a specific percentage share of the deal, or some sort of, requirements in the legal contracts or whatever, that they actually lose sight of the war, which is we want to launch this product and make it a success for both businesses. So yeah, that's an area where you have to be really conscious. It's really hard to walk away, especially given perhaps in some situations the brand or the gravitas of that particular partner. But yeah, if I could go back in time, there's definitely things I would change about that.
Yeah, for sure. I think we've seen it too, which is specifically with large businesses, there's lots of stakeholders to manage.
Yeah.
Every stakeholder has a different incentive structure, and so and understandably they all kind of care about their own jobs and stuff, right? And so learning to manage that within a partnership, and getting the right ambassadors, and making sure that you're strategically important, but as well as significant. It's a tricky balance for sure.
And you're often down to the individual skill sets of the people
Yeah.
you're dealing with, like
Yeah.
to your point, procurement they're there. I know why they're trying to negotiate hard. That's their training. That's their job. They want to walk away and say, we got the best deal for the business. That's where you need that really strong sponsor who's been around the traps, know how things work, and can
Yeah,
pull them into line and say, well, who cares about that? Who cares if you get an extra, 5 cents a widget? The bigger thing here is X, Y, Z, right? And I think that can be lacking. And that creates these challenges. And again, in these large organizations, you may have a great sponsor at some point, but then they may move on, and that throws a whole new set of challenges.
sure does. Sure does. We've seen it. We've seen it many times. We internally talk a lot about North Star metrics and try and organize the business like very much around a few very important things. And I'm sure that's the same when you're thinking about Thriday and metrics that matter most. And so when folks are listening to this and thinking, okay, kind of like Michael, I'll listen to you kind of talk about how we do this theoretically, then operationally, how we put this together, how we kind of understand how we assess a partner before we get going. Like the next step past that is then what's the single metric that matters, which you can point to and say, we're all aligned incentive wise here. Can you talk to me about that around how you kind of set a metric that matters to you and the partner?
Yeah, we had some really, one thing I think we did really well at Thriday was democratization of data. Everyone had it, real time dashboards. We linked them we used OKR framework, which we still use today. And then as part of the OKRs, there was a series of key metrics that we tracked. So for us, there was leading and lagging. So the leading ones were around. We religiously tracked from the start product market fit score, which is a metric's not commonly known in Australia. Often,
No, I don't know. I haven't heard that. Don't talk to me. I haven't had that score before.
it's a great one. It's how would you feel if you could no longer use Thriday? That's the question.
Interesting.
And you've got very disappointed, disappointed, and not disappointed. And you're actually aiming market world class is considered 40%, say they're very disappointed if they would no longer be able to use Thriday. The reason we track that specifically is we do track NPS as well, which is the more commonly known one. But we felt with this one that it's a little bit of a tricky question, NPS, in the context of accounting and tax. A lot of people may not even know that, many other business owners. So we felt this was a bit more of a relevant question. Also for us, it sort of combines some things that from here we could infer that we're reducing the stress that I mentioned at the start, that we're doing it efficiently and cost effectively. So that was always our key metric from a leading perspective. From a lagging, we tended to have specific goals in mind, either with a partner or on specific quarters, to say, this was the level of revenue that we wanted to get to, or adoption of our tax lodgement services. So the key thing for us is we want to be the everything platform for these businesses. The key way we monitor that is if they lodge their taxes with us. The reason we do that is because to lodge your taxes with us, you sort of have to use everything, if that makes sense. Because if you're not doing your banking with us or you're not doing your accounting with us, you're not going to lodge your tax with us. So that's a really good proxy, I guess, for are they using us for everything if they're lodging their tax with us. So we tracked that a lot, and we ended up having about 50% of our customers lodging their taxes with us, which is really, really high. And I think we're going to get that higher over time. And on the product market fit, we consistently exceeded 60%. So knowing that world class was 40%, we were really, really happy with that. And that manifests in, like, if you look at we knew if we did that, those customers, our churn's really low. I won't mention what it is.
Yeah.
Eventually, if you're lodging your tax with us and you've got a very disappointed product market fit, you're not leaving Thriday unless your business dies, basically.
Yeah. Yeah, totally. And man, when you think about, you've obviously built businesses both independently and now we'll get onto your acquisition soon. I can't let you get away without talking about it a little bit, but we'll get to that. And now building a business within like a listed payments ecosystem. What, for those that are listening, does a true, everyone says it, but like, what does it actually mean? Like true win-win ecosystem partnership model. Like what needs to be true for that to actually happen in terms of maybe like the top three things that have to be true in order for this kind of true win-win partnership to work?
Well, I think yeah. So we're currently integrating into Tyro, and even prior to joining the organization, if you look at the fabric of both businesses, I think we're both innovators. We're both Australian-based businesses. So at its core, there's a lot of cultural alignment, which we also looked at the values during. We'll get to the acquisition in a second, but during the due diligence phase, I looked at their values and our values, and they're essentially the same. And when I was chatting to team members at Tyro during the process, we just seemed really aligned. That was number one. The second thing I looked at was impact. Where could we make an impact and not get lost? And if we were to join a 30,000 person bank, or let's say a large fintech, let's use Stripe as an example, global company, we would be a very small part of their strategy and vision. I didn't want us to get lost in a big organization. So that was another lens, and Tyro
Yeah.
was a really nice size, really good people, and I thought we could make a big impact there. So that was motivating. And then I think if you actually look at then the surface level of like I touched on those capabilities, that capability diagram earlier, sort of banking, accounting, tax, payments. There's a series of capabilities that we either didn't have, um, and wanted, or things that make logical sense to our customers that Tyro has. And if you put those two things together, it's a fantastic proposition. So they've got an ADI, so they're a registered licensed bank. They've got some great banking capabilities. They've got an award-winning sort of lending product where they take repayments based as a percentage of your daily takings. Brilliant. I get a loan. I don't have a fixed amount to pay every month. A percentage of it comes out of my earnings. Great. Our customers would love that. And then you touch on payments. So payments is a key part of our flywheel. So for people to sort of manage their accounting tax, they need to get paid. So who better in the market than Tyro for that as well? So just added a lot of complementary capabilities, I guess, and vice versa. They didn't have anything in accounting, tax, budgeting, cash flow, a lot of the things that we bring to the table. So from that perspective, if you're going to offer a single platform, you can't really find much of a better combination than bringing us two together.
Love it. Love it. And so for all those founders listening that have been waiting till now to hear from you around being acquired, every founder's dream, everyone that they start businesses for some at some point, especially if you take external money into the business, a liquidity event has to happen. Uh, Without going into specifics, for those founders listening who are on that path or on that journey, what do you know now that you wish you'd have known before you started the process that you would kind of take on from now if you were a founder doing it again? Maybe few things that were top of mind.
Yes. So I think first thing that comes to mind is always being ready. And what I mean by that is, I think a lot of people often think about it in the context of raising, but I think raising and perhaps exiting are quite similar in terms of what you need to have prepared. So always be ready in that opportunities can arise, and you don't want to be on the back foot if you have interest. You want to know where you stand. You want to know how you value yourself. You want to know how your board is thinking. You want to know how your key leadership team are thinking as well, so that you can be quite agile if opportunities present. And in our case, it was an opportunity that presented sort of out of nowhere. And because we had been prepared, and mostly we had been prepared because we were looking to do a fundraise, we were able to sort of adjust, pivot, so to speak, and look at this opportunity, but look at it, from a position of strength of knowing those things and how we thought of ourselves. I think the second thing is, I know this might be controversial. I have gone through an exit before. One thing I did differently this time is I really limited our use of lawyers. And to the extent that I really only got them in at the binding contract stage. And I was also quite forceful with them about what we negotiated, because I find that, again, it's sort of someone's trying to win a battle. And I'm not here to win a battle. I'm here to win a war. And in the sense, like, I want us both to win. The same philosophy I take with partnering. And even when I got them in, the amount of things that they critiqued in the first version, and a lot of them to me were just pointless. There's a lot of and ifs, like, and if this happened, and if this happened, and if this happened, you could be sued, or if and this happened, and you need to be firm. You know the business better than anyone. You know how things have operated, what you've done, if there's any skeletons or not. And you need to make the judgment call about what things you do and don't do. Yes, you want the agreement to be fair, but I think a lot of times these things get caught up in lawyers talking with lawyers, and at the end of the day, you end up spending $300,000-$400,000 on a transaction, and all you've created is conflict and issues between the two people who actually need to work together after the transaction's done. So I would really strongly encourage people to really limit it and be really firm. And that's just from personal learnings, because I've had other things come up where it's actually derailed those opportunities, And then finally, I think you have to be you have to go in my case, wanting the best for investors, but the team. And I think people often overlook that. I understand as a business and as a founder, our job is to look after our investors, get the best outcome for our investors. But I've actually always run a business with the view that I've really enjoyed building teams, seeing people grow and mature in the business, build up new skills, even some of them move on and find other things that they love doing. But that team component was always really important to me. And to me, that also reflected in the exit and how we structured the deal. And I wanted the team to ultimately, get a good outcome out of it as well.
Awesome, mate. I could chat to you absolutely all day, but I'm going to ask you one final question before we wrap. And we're going to gaze very slightly into the future. And that is the next 30 days. Not too far. Pretty good, right? And if you are maybe a head of partnerships, CDO, listening to this and thought, yeah, we have been thinking about building like an embedded strategy. We have listened to this and think, yeah, we need to get started. What's like the one or two things they should do in the next 30 days to go from theory to action of going, yeah, we're going to get started in the strategic approach?
Well, you could launch something in 30 days, but I understand that may not be achievable for all business types. But I'll definitely, again, putting my product hat on, map out the customer flow or the capabilities that you're trying to deliver. Pick your partner. And start start talking to them, and in parallel, if you can, do some outbound research to your customer base. Either, like I mentioned, create a wait list or a survey, or pick up the phone and see if you can start to gauge the interest levels in that particular product that you're looking to embed. So that at the end of 30 days, you've essentially got two things. You've got the target state proposition. Let's make it three: target state proposition, some potential partner options, and what the customer demand's likely to be, so that you can move forward into that next phase of, I guess, due diligence with those partners. That's what I would do.
Mate, absolutely love it. Well, look, Michael, it's been so good, mate, to watch from the sidelines and see you grow the business and exit into Tyro. And I'm sure this next chapter is going to be as big, if not bigger, than before. So congrats again, mate. It's been great watching from the outside, and I look forward to seeing kind of what the next 12 to 24 months looks like for Thriday inside of Tyro.
No, thank you for having me, and it's great to see how you've taken your business as well, and look forward to seeing it grow and grow.
Awesome. Cheers, mate. Well, look, thanks again, and have a wonderful rest of your week.
Thanks, Nigel. Bye.
Cheers, mate. Ciao.